Now, that's obviously the goal. Get you to become a full-time trader at the end of this. But we need to understand that stock trading is broken on up into two different main categories, and they both start with E. And those two E's are going to be education and experience. We can be able to nail the educational portion, and that's what we're going to do. But now you need to take what you have learned from the educational portion and then now be able to build in the experience. We can study, we can research, we can do everything that we possibly can, but at some point we need to be able to apply it. And that is what is going to be so important here. So when we again think about our trades and we're thinking about what we want to do here, if I know how to trade, that's great. But once we start getting emotions involved, once we start seeing those P&Ls moving, once we start saying to ourselves, okay, do I want to get in? Do I want to get out? These are all things that do come with time. So we want to be able to absolutely check off the one list. Something you can kind of relate to, I'm going to relate and have a lot of analogies probably to sports, is that I like to play golf. I could sit here all day and watch a YouTube golf video of the perfect swing form. You want to hit it like this. You want to put your elbow here. You want to put your wrist here. You want to be able to put your head here. You want to turn your hips like this. And I could study absolutely everything perfectly. But at the end of the day, I could just be a huge, out of shape, unathletic person that doesn't know how to hit the club. Because the thing is, sure, I've watched tons of YouTube videos on how to be able to hit a golf club, but that doesn't mean I am able to do it unless I go out and apply it. So what I want you guys to do right here when I'm done with these lessons is go ahead and apply it. So the first thing that we are going to be talking about right here, traders, is going to be paper trading. I want every single person here, and I know it's not fun, I want every single person here to paper trade for the next week and a half straight. I have said this before in the past, but I'm going to say it again in the future or in the present moment right now, is that if you want to be successful, I will give you the secret right now. I will tell you how to be successful right now, but still 99% of people will not do it. Isn't that crazy? I will tell you exactly the step that I took and what I think everyone should take and what the successful students out of Tradecaster have done, and still 99% of people still won't do it. And what that is going to be, you want to paper trade until you have 3 months of consistent green. Consistent green 3 months in a row. For me, this took about 12 months to do. If you start in June and you go red, guess what? You start fresh in July. July, you go red. You start fresh in August. Now you win August, you win September, but then you lose in October, you go back to 0. Then November, then October, you lose, you go back to 0. And then maybe finally you win on December, January, February. Now, why is it 3 months in a row of green? 3 months in a row is going to allow you to go through different market conditions. It's going to allow you to be able to go through different economic events. It's going to allow you to go through different things that are going to be able to help you understand, okay, this might happen in the market. Ooh, this may happen in the market. I am so tired, guys, of having someone come up to me and saying, oh, Deck, why am I not successful in the stock market? I was able to turn a $3 million paper trading account to $20 million, but I can't grow that in real life. Traders, what you must understand is that you must be paper trading with what you have in real life. If you have a $5,000 account, grow a $5,000 paper trading account. Grow it once, grow it twice, grow it 3 times. But the reality is the majority of people are going to say, number one, I don't want a paper trade. I want a real money trade right away. Hey, what happens if we never again swung a golf club in our life and we go out and we try to play the PGA Tour? We will come in last place, we will win no money, we will lose all our balls, and we will be laughed at on ESPN, right? That's what would happen. So why would it be any different? If I've never picked up a football, why do I expect to be all of a sudden successful in the NFL? Oh, because I studied the playbook? Again, we already talked about this. We need to have education. We need to have experience. What we are going to do here is teach you how to trade, but then you need to apply it. And that applying, let's do it where we're not going to lose real money. When I first started trading, I blew up account after blowing up account after blowing up account. Fake money. I blew up probably 10, 20, 30 accounts. Now, guess what? I couldn't do that with real money. If I blew up 10, 20, 30 accounts, I'd be down $50, $60, $70,000. That wasn't the type of money I had when I was first starting on off. And the majority of us don't have that type of money that we could just throw away and say, no big deal, I'm just learning. So why not take paper trading serious? Why not be able to say, hey, you know what? I want to be able to do this until I do it right. So a lot of people paper trade for a week, Deck, is this long enough? Well, guys, do we actually see results in a week? If I was a fitness trainer and I wanted to get myself in shape, and you say, hey, you know what? I'm going to work out for a week. How many of us actually see results in 7 days? Not really, right? Do you see results in a month? A little bit. 2 months, getting there. 3 months, 90 days, much better. So the thing is, it's a patient game. You have to stay disciplined. If you can't be disciplined to paper trade for 90 days, if you can't stay disciplined to paper trade until you're actually successful, until you're actually winning. The crazy thing is, sometimes people lose, and they say, Deck, I paper trade for the last month, I'm ready to trade real money. You've never made any paper trading money. Why do we just want to throw away our profits? Then all of a sudden we start trading real money, we lose it all, and we say, oh, day trading's a scam. Guys, is day trading a scam if you're not good at it and other people are? Is the NFL a scam if they make it to the NFL and you didn't because they're better than you? It all comes on down to who's willing to work. It all comes on down on who's willing to actually put in the time. It all comes on down to why is there a group of people who are able to do this full time and then there's a group of people who aren't able to do this full time, right? That's the main thing that I want you guys to be able to understand. So when it comes down to paper trading, when it comes down to learning how to trade, you must be able to put in the time to actually say, hey, you know what? We're good here. So for me, that took me about 12 months. Now, after we paper trade, okay, hey, we have finally paper traded. We are all set, ready to go. We have finally paper traded. Deck, I'm a year in right now. What do I want to be doing next? The next thing I want to be able to do is going to be building on up. I'm going to just type out some things as we go here. I'm going to be building on up my emotional tolerance. That is going to be huge. Emotional tolerance. And now what our emotional tolerance is all about is going to be starting small and then adding real money as we go. So we are building up our tolerance. We could think about this in many different ways. Just like if we want to stick with the fitness. And when I first go to the gym, I start with very small weight. Maybe just the bar, maybe some light dumbbells. And why is that? Well, because my muscles aren't used to it, right? I'm very weak at this time. I need to build up that muscle. I need to build it up in my body saying, hey, we're going to start pushing weight around. And now your mind, your body is going to adjust, is going to adapt, and then you can go from there. Now, in stock trading, guess what? Your tolerance is going to be when you first put in 50 shares, your heart is going to be beating. When you first put in 50 shares, oh man, whoo, you might only just see that P&L moving 50 cents, $1, $2, $3, $5, but you are going to have that adrenaline rush. You are going to be saying, I am trading. This is real money. The money's in the stock market. I'm starting to sweat. But guess what? Everything that you just learned paper trading is now going out the window. And why is it going out the window? Because again, now you're having real money in. Now you're so focused on the real money. The moment you're in the red, you start freaking on out. You're not worried about the chart. You're not worried about support and resistance. You're not worried about anything that we've learned. All we're worried about is please go up, please go up. Traders, if we start turning this into a please go up game, that is when we are going to decline in our portfolios extremely quickly. We can't turn this into gambling. You have heard me say this a million times. But what I want you guys to start doing is being the house. The house. You want to place the odds in your favor. If you place the odds in your favor, that is where you are going to have the greatest chance of success. Well, Deck, how do I place the odds in my favor? Well, this is the thing about gambling, guys. You know, the thing about gambling, when you go to a casino, no matter what, you are already in the red. You are already saying, I am going to be going against the odds. I'm hoping I beat the odds. If that's blackjack, 47% to the tourist, 53% to the house. If that's roulette, we have again a 50-50 red or black, but there's also those greens in there. So we got 48% over to the tourist, 52% to the house. Over time, the odds always win. How do you think, again, these casinos have these $100 million chandelier room penthouses built up on the main strip? Do you think they got that randomly? No, people are literally donating their money there every single day. And guess what? People donate their money to the stock market every single day. But the thing is, the stock market, it's money from one investor goes to another investor. It's not going to a casino. It's going from person to person. So there is always a person that is winning. There is a person out there that is always collecting. So you have to be able to figure out, how can I be that person? Well, if I close my eyes and I just pick a random play right off the rip, boom, I'm going to buy this one. I already have better odds than a casino. Because it's a 50-50 chance. It's going to go up or it's going to go down. But now, if I do a little research, now if I study, now if I put in the work, now if I again say, okay, I know this strategy, I know this chart, I know this support, I know this resistance, I know this indicator, I know this global event, well, now all of a sudden it's 70-30, 70% chance that we're going to be winning, 30% chance that we're going to be losing. We start doing this more and more and more, and we start perfecting the strategy. We have an 80% chance of winning, a 20% chance of losing. So sure, are we going to see our red days? Absolutely. There are going to be times of red. But what I want you guys to note and what I want you guys to understand is that you will win more than you lose if you have a consistent strategy. But this is where things start going bad. Things start going bad when all of a sudden you start saying to yourself, oh, I have a red day. So now you start trying to make up that red day. And you start making up that red day, and then again, you go deeper and deeper and deeper. Now you're again down in the red. Now you give him back the last month. Now you start freaking out. Walk away from the computer. Traders, some things I want you guys to do right away, starting on off, is I want you guys at this time to say to yourself, all right, if you ever lose more than twice in a day, we walk away. Okay? If you lose more than twice in a day, you walk away. We are saying to ourselves, you know what? If this day is not working for me, it's not working for me. We need to understand that when we trade, it is going to be different every single day. And sometimes we are going to be trading when other days are better than others. And sometimes our thinking and our psychology and our thought process and our strategy is going to be clicking than others. I always say that sometimes that stock trading is like, trading in the weather. Some days it's beautiful, some days it's raining. And when it's raining on out in the stock market, I say, hey, I'm not having fun here. I'm going to walk away. The issue is so many traders, so many people put themselves in positions that do what? That all of a sudden they end up losing and they say, I have to make it back in one day. Has anyone ever done that before? Has anyone ever put themselves in the red by going deeper and deeper and deeper, trying to make back more and more and more, and all of a sudden you're saying to yourself, man, I am just again, destroying my account. Well, why don't we have a limit? So, especially when you are starting on off, maybe again you say to yourself, when I'm first starting on off, what is a 10% gain to my investment? And let's cut that in half to a 5% loss, right? So if we are only investing, let's say again, a smaller account, let's say we are investing $2,000. If you win $200, that's a 10% gain right there. You just did an amazing job. Now, the thing that a lot of traders do not understand is that it does come down in stock trading to the more money you invest, the more money you are going to make. That's just the simple fact. Everyone is always hunting for that 10% return. Long-term investors look to make 10% throughout 12 months. Day traders like to make 10% within a day. Swing traders like to make 10% over a few days. But the issue is, a lot of people with smaller accounts don't realize how much money they actually are making. It's very easy and very simple to get lost in the world where we are again surrounded by social media, and there's a 16-year-old driving a Lamborghini and saying, oh man, I made $20 million today. And you're saying, what the heck? I only made $200 today. Traders, what you need to note is anything over a 10% gain is an absolutely incredible trade. Think about this. People try to get a 10% return on a year. If you are getting a 10% return on a day on an options trade or a penny stock spike or a short or a swing trade, whatever it may be, that is incredible. But I know, again, I go on social media and I'll see someone say, I had a 2,000% return in 24 hours. I had this return. But don't get lost in that. Let's again stick to what we want to know, which is going to be fundamentals. We want to actually build a structure. We want to be able to build this foundation that we could be able to build on of consistency. Because every single person who actually has had a 2,000% gain probably has thousands of percents of losses over and over and over. Because usually the only plays that are going to be giving 2,000% returns are going to be crazy random cryptos, are going to be crazy small little penny stocks, are going to maybe be the one every year type of GameStop squeeze and spike, something along those lines that just don't hit very often. So, what I would rather teach you guys is not the gambly type of Wall Street Betty type of trades. I want to be able to set you guys up with foundation success that you can build off of. So if we are looking for a 10% gain every single day, we are also going to be understanding that if we have a 5% loss, that's where we want to be able to get out. So if we are again investing $2,000 and we lose $100, we might want to say, all right, it's time to get out of this trade. All right, it's time for me to move on to this trade. Now, remember traders, this is going to be much bigger once you start increasing size. You might have 20,000. Now you might say, all right, hey, I have a $1,000 loss. That's when I move on. And with my $2,000 win, that's when I be able to take profits. It really does come on down to still following that simple 2-to-1 ratio. Now, as again, you get better and as you grow and as you work hard with your trading, some people might get a 3-to-1 ratio. Some people might get a 4-to-1 ratio where they say, hey, I want to go for a $4,000 win and I want to keep it at a $1,000 loss. And as long as you actually have those stop losses, as long as you actually say to yourself, you know what, I am going to be all set, ready to go here, as in I'm actually going to stick to it, that's when I'm going to be successful. But that all comes on down to having a trading plan. No matter what, every single time, before you get involved in a play, it should never be, let me jump in on this play right now. I got to get in. Everyone else is jumping in. What you need to figure out is first is your why. We need to have a why. We need to have an entry. We need to have a stop loss. We need to have an exit. These are all things that I want you guys to be understanding of. Why, entry, stop loss, exit. So when I am getting myself involved over in a trading plan here, I am thinking myself, why? Why am I investing? If your answer is, I am investing into this play because everyone else is investing into this play, that is an awful reason to be investing in this play. You do not want to be jumping into a stock just because everyone else is jumping into the stock. I'm going to show you right here, traders. If you do not know, 80% of stock traders lose. 80% of stock traders are not successful. So why the heck are we following people that are not successful? We follow people on social media. We follow people on TikTok. We follow people on YouTube. We follow this guy because he has a lot of followers. We follow this random person because he owns a Lamborghini. The thing is, traders, we must be able to think for ourselves. When I first started stock trading, when I first started getting involved in stock trading, I would follow everyone. I would be heavily influenced. I would say, this guy must know more than I know. So you know what? Let me follow what he is doing. That's not what I want to do. There were so many times that I would jump on Twitter or StockTwits or whatever, Discord or wherever I started, and I would say, hey, you know what? What do you guys think of this? And I would be buying it. I'd be long on it. And people say, that stock's garbage. That's trash. I'm shorting that. You're going to end up losing all your money. Guess what I would do? I would get out right away. Sorry, I didn't mean to say anything. Who the heck is that guy? Right? That guy doesn't know anything more than I know. That guy's just randomly, again, typing on the internet, trying to persuade people to push the stock in one way or another. Right? You want to be able to have your own self-thoughts and not rely on other people's self-thoughts. So the thing is, when we first start getting ourselves involved in a play, we need to ask ourselves, why is this stock moving? Why are people interested on this play? Why do I actually want to be invested into it? If you can't actually even think of a why, if you can't think of why I actually want to get into it, well, there's no reason to get into it. Sometimes I like the idea of what may happen. Sometimes I live in fantasy world of what may happen, but that's not actually what is happening. I want to see a stock that has a good chart set up with good press release, with good news, with good volatility, with good action. I want to have a why, as in, okay, when I pull the trigger, there is good credibility behind it. I want to think about this, traders, as, you know, going back to sports. There might be a basketball player, right? And maybe, again, they're passing the ball around, great ball movement. It comes to you. You have your feet set. You're in that nice position, and you, again, uncork it. And it's great. The ball's spinning perfectly. It just hits the back of the rim and comes on out. Can you be disappointed with that? No. You know, why did you shoot the ball? Well, the ball was moving perfectly. It came right to me in the corner. I was wide open. I had my feet set. I, again, kept my elbow in. I shot, hit the back of the rim, and it kicked on off. It was a great shot. It was a great purpose. Everything you did was correct. Your coach wouldn't yell at you. Your coach would say, hey, keep pulling the trigger. That was awesome. That was a great play you did there. You did it for a reason. Doesn't mean it's always going to work, but you are going to sync those while in rhythm. Same exact thing when it comes on down to here, traders. If we have a good reason and we know we are not gambling, because it is going to be so simple, it is going to be so easy to fall into the trap of gambling, then we are going to say to ourselves, hey, all right, you know what? Now I know why I'm doing this or why I'm staying away from it. Now, we also want to be able to have a great entry here. Now, entry, traders, entries we are going to get in on later. But when we're talking about an entry is all it's going to be is where are we going to buy into this play? when I get involved into a stock, your entry might be the most important aspect of the entire play. And the reason why is because if you do not have a good entry, you might see yourself go into the red right away. Now, I'll tell you right now, as a trader, that is my least favorite thing. As a trader, when I jump into a play, there's no better feeling in stock trading when I jump in and all of a sudden it's green from the start all the way to the finish. How nice is that for anyone who's traded before? How great is it when you jump in on a play and you say to yourself, all right, I'm pulling the trigger, I'm in, and it's nothing but green. It's nothing but moving on up. It's nothing but profits. Oh, man, that's such a terrific feeling. But it hurts when you are saying to yourself, you jump in and it's red, red, red. And you got to say to yourself, all right, hold on. Let's follow the game plan. I think this is going to work on out. We don't want to be second guessing ourselves. We want to be able to get in at nice bottoms, at nice tops, where we are going to always be able to see pivot points. So we're going to talk about that in the future, but just a little, foreshadowing here. Entries. We are always looking to see where is a pivot point going to be. Where is the stock going to start moving up? Where is the stock going to start moving on down? Next on up is going to be a stop loss. Traders, this is probably going to be the thing that 99% of people also avoid. People do not place stop losses, which is insane. It is crazy. And you will notice that you will go through a little rebellious phase as well by not setting a stop loss, but all it takes is one bad trade for you to get burned and end up taking a loss. Guys, I don't want anyone to go through that, but I've gone through it before. I know, again, the majority of traders have gone through it before, where you say, oh, I don't want to set a stop loss. And you don't set a stop loss, and all of a sudden the stock starts falling on down a little bit more. It goes to the area where you said you were going to get out, and you don't. And it goes a little bit more, and you said you were going to get out here, but you still don't. And then it crashes on down even harder, and you end up taking a loss. If you are a person, and you need to be blunt, you need to be honest, you need to be transparent with yourself. If you are saying to yourself, I'm not good with getting out, I don't like seeing red, and I tend to hold on to these plays longer than I should. Just manually place a stop loss on your broker, and then your emotions are all set. You're all good. You're all ready to rock, right? Because if this play goes against you, let's just keep it with that 5% loss. We're going for that 10% gain. Let's just go for that 5% loss. And if it hits, it hits. But you know what? We didn't blow up our account. Traders, we never want to have one trade end up losing everything. Guess what, team? Let's think about it like this. If someone comes up to me and pinches me, it's annoying. Someone pinches me, I'd say, stop it. You're just annoying me. You're just annoying at this time by pinching me. It somewhat hurts, but it's not a big deal. It's just more, annoying. But what if someone comes on up with a samurai sword and hits me in the gut? Okay, that's going to be a lot more painful. I would much rather just get little pinches in the stock market where, sure, they're not going to blow up my account. But you know what? They're just annoying. Why again did I take that loss? But you know what? I can recover from it. Guess what? I recovered from my pinch right there. If someone comes up with a samurai sword, it's going to take a whole lot of time to recover from. It's going to take a whole lot of time, a whole lot of money. The thing is, we don't want to ever even go through that. We don't even want that opportunity to be able to happen. So we must be disciplined to be willing to get on out. And then on top of that, guys, our exit. And our exit is going to be our target, where we are actually looking to be able to get out of this play, and that is going to be our 10% gain. So already we are starting on off, and we're thinking to ourselves, okay, when I trade, I want to go for that 10% gain. If that's day trading, swing trading, long-term investing, whatever I do, I want to have that 5% loss. I want to follow that 2-to-1 ratio. I want to eventually get up to 3-to-1, 4-to-1. I have to be able to say to myself, okay, hey, trading plan, 80% of stock traders lose. Why is that? Because they don't have a game plan. Now, if we have a game plan, we are asking ourselves, why are we getting in? We are thinking about our entry, our stop loss, our exit, right? So these are going to be some of the top things that we want to be focusing on. Now, also traders, let's just keep this party going. We want to be thinking about what to honestly look for, right? What to look for in a stock, okay? So what are we thinking about when we're actually trading? What to look for in a stock? The big things, and it depends on what type of trader you want to be. Okay, so if we are wanting to be a day trader, like someone like myself, I like to wake up, I like to trade, I like to make a few hundred to a few $1,000s a day, and I like to say, hey, you know what, I'm happy. If that is the type of trader you want to be, right, and some things are going to overlap, the number one thing that we always want to be looking at is going to be volume. The more volume a stock has, the more activity it's going to have. So you have heard me say this before. Volume equals activity. As long as we have stocks moving, we could be able to have profit. So it all comes on down to the faster these plays move, the more money we can make. People say, oh, I like this stock. But if the stock's not doing anything, you will not be able to make cash. So a great example would be GNLN. GLNN. This play right here has gone from $2 and has spiked all the way up towards $10.60. This is the best play of the day so far. Now, why is that happening? How is this happening right here? Well, if we take a look over on GNLN, take a look at its average volume. Its average volume is 53,000 shares traded today. Its volume today is 11 million. So on a normal day, it brings in 53,000 shares. Today, it's bringing in 11 million. Guys, how much of an increase is that? 10, 20, 50, 100% increase? You could see this is getting really out of hand. You could see that every single person is here. The more that this is above the average, the more it is, the more active it is, the more crazy it is, the more obviously there's a reason why traders are here. When a stock has this hype, when a stock has this type of momentum, we could be able to make money. So when I'm asking what to look for in a stock, for me traders as a day trader, it comes down to volume. Volume equals activity, activity equals profit. It also comes down to float. When you have a low float, you are going to be able to spike very well. So low float, anything that is 5 million or under is considered very low. Anything between 5 million to 15 million is going to be just low. Anything from 15 million to about 30 million is going to be more towards the average side. Anything 30 million plus is going to be more towards a higher float. So if you guys are ever trading stocks that are $20, $10, $15, $2, somewhere in that smaller cap play, you are always going to want to be look for a lower float. The lower the float, the bigger the spike. You guys could be able to see the float just by heading on over towards yahoofinance.com and or if you guys have different scanners, and you will be able to see, okay, hey, like TRNR. TRNR went from 35 cents, spiked all the way up to $1. This stock was up 130% this morning. How did it do this? Well, because again, the stock has a lower float. So we can go over to TRNR, right? TRNR right here over on Yahoo Finance. We can go over, click statistics. Once we click statistics, we can scroll on down. You can see the float, and look at this. The float is under 1 million. So it's under 1 million. So 490,000 right here by the float. So how crazy is that? When we have a stock that's that low in float, we have a stock that is that weak right here, or that low in float, that is going to allow the stock to be able to go on a very big spike. And don't worry, we will be going on float in the future. But when I am looking for what do I want to see in a stock, I want to see volume. I want to see activity, and I know that's going to bring in profit. I know also when there is volume and there's a low float, we are going to get a very big spike. Well, what else do I want to look for in a stock? What else do I want to look for in a spike right here? Well, traders, as I talked about before, I want to look for a reason. Like, why do I want to invest into it? Well, is this reason because maybe it has, the current hype, maybe the hype on the day, or maybe it's the current trend, like, EV, electric vehicles, or AI, or maybe it just has really hot news on the day. So we know, again, current hype plays. What's the play that had, all the current hype over the last 2 years? Well, NVIDIA, AI stocks, that has been crazy. We take a look over on these plays, that stock went absolutely bonkers, went absolutely nuts, because it has to do with chips, these AI chips. Same exact thing with SMCI. That play went crazy because it has to do with those chips, those AI plays. AMD also went crazy because it has those chips and those AI plays. Well, we also seen what? Well, what else do we have? We also have, maybe it's just the hot play that everyone's talking about. Maybe it just has the current hype, such as like GameStop. We know GameStop sometimes go crazy, and those are the ones that have the hype and the volume and the momentum. Or maybe it just has hot news. Like today, we could take a look over on this. We take a look over on Fox Runner here. What's the best press release? GNLN. GNLN comes on out, has a non-binding letter of intent to be an exclusive distributor of the U.S. safety strips. We can go ahead, check this on out, open the full article right here, and we could see right here, wow, okay, take a look at this. They've been selected to be the drink and spike detection test strips. That's great. So that's a good, credible press release that we have. And guess what's happening? Well, GNLN is going on the #1 top gainer of the day. And GNLN has spiked on up $9 on a day. So we always want to be asking ourselves at this time, what's happening here? What to look for in a stock? Volume, activity, profit, right? Do we have a low float? Is it 5 million under, 5 to 15, 10 to 20? Do we have a reason? Does it have the hype? Does it have the trend? Does it have the news? You know, what's getting ourselves actually involved over on this play? What's actually helping us over on this stock here? Now, we also want to be thinking, well, what if I'm not a day trader? What if I'm maybe looking for a more of a better long-term investment? Well, if I'm looking for more of a long-term investment, I think of one word. One word comes to my mind, and that is going to be safe. If I want a long-term investment, I want to think of the safe plays. What are the safe plays? Guys, the safe plays aren't secret plays. The safe plays are plays that we already know. On average, the SPY is going to give a 10% return every single year. Okay? The SPY gives a 10% return every single year. Some people like to just throw their money in the S&P 500 and say, hey, we're good. Some people like to put their money in VOO, which is going to be the Vanguard S&P 500. We are also going to just have, hey, maybe I want to do select plays, certain plays such as Apple. Apple's a great one. Tesla's a great one. Google's a great one. Microsoft's a great one. Amazon's a great one. Going with plays that everyone knows, right? There are many different ways to diversify. You can be able to have your long-term investments. That's absolutely awesome. That means you could just throw it in a big ETF such as the S&P 500 or VOO. You could be able to do individual stocks, Amazon, Microsoft, Google, Tesla, Apple. That's going to be nice, safe plays. Some people like to do stocks that pay out dividends, which means every single a quarter that you hold it, they pay you money to be able to say thank you. So again, Charles Schwab does that. So you guys can look into that company and be able to say, hey, you know what? We have dividends over on these plays where we are getting paid on out every single quarter. That's something that you can look at. But the word of long-term investing is safety. I want to look for slow, steady gainers where I am saying to myself, I don't need to worry. Stick with plays and ETFs that everyone wants to be looking at. So when I'm looking at a play, I don't want to be looking for a lot of times on stocks that are falling and hopefully they turn into big investments. I want to look for what are in the Magnificent Seven. What is in Apple, Tesla, Google, Microsoft, Amazon that are now getting to an area that could be a dip buy? Because all of these companies, guys, essentially these are the companies within business that run the business world. They are not going to go out of business. These are companies that, yes, are going to have times and periods of down, but they're also going to have times and periods of very strong up. And the thing is, when you guys take a look over on this, let's just go back to the S&P 500. The S&P 500 on the monthly chart. Take a look at how great this investment is. The S&P 500 going all the way back to 2009, we could see that we were way down here, and year after year after year after year after year after year after year, we continue to spike. How great is this, guys? How great is it that if you know that over the last 15 years, the S&P 500 just moves on up? Now, sure, there are periods of down. Absolutely. There was a period right here in 2022 where we dropped. But then guess what? We made it all back. And there was a period in 2019, 2020 that we dropped. And we made it all back. And then you could see in 2008, 2018, and in 2008, we dropped. And we made it all back. So, the smartest and the safest investment you could ever do is just say, hey, S&P 500, let me get involved here. S&P 500, that's what I'm going to be trading. S&P 500, slow, steady, consistent. So I do want you guys to realize there are going to be those crazy hot plays, but there also is just safe, smart investing as well. And that's something I do want every single trader to be on top of. Now, what else do we have going on, traders? Let's bring this back on up and go back to our bootcamp guide. Now, before we were talking about, a lot of different ways to be able to trade. And remember, we actually were over on paper trading here. And in paper trading, we brought up that emotional tolerance. Now, emotional tolerance, when we actually start now investing, okay, and we actually start putting our money back into these plays, we want to go slow. We want to start with 50 shares. Then we want to go to 100 shares. Then we want to go to 200 shares. 400 shares, 1,000 shares. We want to build up our emotional tolerance. I will tell you right now, if we go from paper trading to all of a sudden doing 2,000 shares and we have $5,000 invested, you will freak out. You need to go to the point where you are barely making any money, but you know what? You have real money invested. Then your heart's going to pump. you're going to get an adrenaline rush. Then maybe after 1 week, maybe after 2 weeks, maybe after, a couple more, weeks, it kind of comes down to, all right, hey, this is getting simple. This isn't, as exciting anymore. Then guess what happens? Then you go ahead and you bump it up a little bit more. Now you have more money in it. You have more money, more wins, more losses. And now your heart's starting to go crazy. But then guess what? You are going to adjust. And as you adjust, you start going. When I first started stock trading, if I saw a $100 win, my heart was fluttering. I'm saying to myself, wow, this is insane. Now, guys, my heart starts fluttering and starts getting insane at $10,000. So you can see how there's a difference. Traders, I used to go skydiving all the time. It's like 3 years ago, I used to jump out of a plane and have fun. I have 60 jumps, which in the skydiving world isn't really that much. But the first time you jump, you are absolutely freaking out. By the 10th time you're jumping, you're freaking out, but not as bad because you know what's going on. By the 40th time you jump on out, by the 50th time, are you nervous? Absolutely. But it's way more calm. It's way more easy. But then again, maybe you start doing different things. Maybe you start jumping with different people. Again, you're always kind of keep going up higher and higher and higher. And as you adjust, you're able to proceed and be able to progress. Same exact thing with, again, stock trading here. Stock trading, you got to start small, and then as you adjust, you proceed, and as you progress. Same exact thing if you're skiing. When you're skiing or snowboarding, you start on greens. Then again, it's very scary, but then again, once you calm down, you can then start going to the blues. And after the blues, you go to the black diamonds. After the black diamonds, you got the double black diamonds. The next thing you know, you're jumping out of helicopters, landing on top of peaks, and you're saying, hey, yeah, I'm pretty good at this. That's the level we want to be able to get to. But we have to be able to build up that emotional tolerance. And as we build up that emotional tolerance, that is when we are going to have the most amount of success. So far, guys, we're about 45 minutes in. Want to, again, really stress the importance of paper trading and having you guys realize these are the steps that you guys need to take. Take it serious. Take your paper trading serious. You have to have 3 months of success before going green. Then on top of that, you are going to build up your emotional tolerance. And this is the part that people usually don't like. In most cases, well, for me, it took a little over a year before I actually started making money in the stock market world. Before I actually started profiting in the stock market world, it took a little bit over a year. Now, in the grand scheme of things, that's not very long. Because as you have heard me say in the past, if I go to school to be a teacher, I have to go to school for 4 years, get a degree, then a high school, an elementary school, an intermediate school will hire me. If I want to be an accountant, I have to go to school for 4 years, then some sort of business will hire me. If I want to be a lawyer, I have to go to school for 8 years. If I want to be a doctor, I go to school for 8 years. If I want to be a surgeon, I might have to go to school for 10 years. But if I want to trade the stock market, and you're telling me it only takes 1 year, that's pretty amazing. Isn't that pretty special? But even that, even the fact that we are cutting off 3, 5, 9 years of work. Some people say, well, Deck, I want to be a stock trader now. Oh, I don't want to paper trade. I don't want to learn. I just want to follow what you do and hopefully I get rich. Traders, if that is your attitude, this will not work. If your attitude when you go to a personal trainer says, ooh, I want to look like Thor. You ever see Thor, personal trainer guy? You ever see him? Yeah, I want to look like Thor. I want to look like Captain America by the end of next week. I have a date next week. I met some girl on Tinder. I want to take her on out. And you say, that's just not possible. And you get all upset and you say, what the heck? I'm going to go hire a new trainer. It's just not how it works. If you want to look like Thor, hey, you can. But it's probably going to take about 1.5 years to look like Thor and putting in work every single day. If you want to be a successful stock trader, you can do that. But it's going to probably take about 1 year to be able to get everything in, learn, adjust, have the education, and then build the experience on top of that. These are going to be two different things that we really need to be able to understand and we need to be able to break on down. So it takes time to be successful. If you guys paper trade, if you guys follow this, if you guys are starting to get to your strategy right here, this is what it all comes on down to. Now, let's get rid of this stuff right here because we are able to check off paper trading right here. Let's just write this on out. Done. Boom, guys. First little segment with paper trading, understanding how paper trading works, how, again, what we want to do right here. That is great. That is awesome. And let's move on to point number 2 right here. And can I ask you guys, just out of point 1, obviously we got 17 more points to go, and I only got 2.5 more days to do it. So as you guys can see, we are going to be having an action-packed, we are again putting everything in on this. And if you guys are writing away on that notebook and your hand is starting to cramp on up right now, you better again go order yourself a wrist guard off Amazon at this moment, because get yourself a couple more number 212 pencils and a couple erasers, because things are about to get nuts. Lock the door. Put some shades over the window. I hope you guys are fired on up. I know you guys are in the chat room. If you guys are enjoying it already, let me see a good old deck more trades. Ahoo! Drop them in the comments, baby. I love it. So team, let's move on to the next point. Right, the next point right here is going to be those do's and those don'ts of stock trading. Right, I want to make sure that every single person really understands what are the issues with new traders. Okay, what is the issues with new traders, so that you guys are all set, ready to rock here. All right, and let me just bring this on up right here. All right, awesome. So, do's and don'ts of stock trading. I think that one of the best ways to be able to trade, or the best ways to be able to understand how to trade, is by learning what not to do, right? You always hear this. You always hear, hey, how do I be successful? Oh, you got to do this, you got to do this, you got to do this, you got to do this. But the thing is, traders, we also got to learn what not to do. Right? If I again do this, I will not be successful. The way that I learned, the way that I got involved in trading is I went through so much trial and error. I went through so much work ethic. I went through so much, this didn't work, this didn't work, this didn't work. And then guess what? Hey, now again, this did work. Now again, this figured out, I'm going to remember this. This didn't work, this didn't work, this didn't work. Now this did work. I'm going to be able to figure it out. This didn't work, this didn't work, this didn't work, this did work. And then over time, I was able to start putting things together that did work. But I want to eliminate that curve from you. I want to say, okay, what shouldn't I do? And then we'll be all set, ready to go here. So what shouldn't I do? Well, the number one thing that I think a lot of traders, let me get this right here, is they don't do correctly, and we kind of touched on this before, is that they do not cut losses quickly. We already briefed up on this. We already said that traders a lot of times do not set stop losses. And when they don't set stop losses, they see their account diminish. Traders, please write this on down. Do not let one trade affect your stock account in a negative manner. If you again are losing 50% on your trades, you already know right away you will never be a successful stock trader unless you make a change right here and right now. There's no way that you will ever be successful if you do not set those stop losses and you do not cut those losses quickly. You must be able to say to yourself, I'm getting on out of this play. Now at the same time, you also must say, I'm getting out of this play when I'm up in profits. I cannot tell you how many times traders have been up $100, $300, $700, $1,000, and they do not take their gains. I was actually talking to a trader last week, and the trader last week stated that he was, stated that he was up $10,000, and he was going on social media, and he kept saying that everyone said, keep holding, hodl, hold. Everyone, it's going to go up to the moon. And he ended up losing all 10,000 and actually finished in the red, down 2,000. Has anyone ever been up on a huge trade before and then ended up losing everything just because you never locked in your profits? The best way that I like to think about this to keep me again structured is I think about my job, right? I think about my old job. My old job was I was a snow tube employee. I would again push people down a mountain at a ski resort, and I got paid $8 an hour in wintertime. So I would again show on up at 10 o'clock in the morning. I would work all the way until about 10 o'clock at night. This would be a 12-hour shift. Excuse me. I would work a 10 to 12-hour shift, and I would be again finishing off the day somewhere right around like $95. Imagine that, guys. Imagine sitting outside in January for about 10 to 12 hours, finishing off my day with $95. Pretty brutal, right? Not really that fun. But now I'm stock trading. And sometimes in stock trading, I'm up $500 and I'm screaming, I want more, I want more, I want more. And I never take my profits. How crazy is that? How is it that I complain that I go to a job, I work underneath a boss, I'm again, only making $95 after a 12-hour shift. And now I'm sitting here clicking a button in my beautiful apartment, in my beautiful house, alone, not with the boss, not after a commute. And I'm saying, I want more, I want more, I want more. Is that how we are going to be successful? No. So we must cut losses quickly, right? That is very important. But at the same time, we must be able to take profits when we have them. If we do not take profits when we have them, we will never be successful, right? That is going to be so important for us. Taking profits when we actually have these profits is the only way for our account to be able to actually grow. We talked about earlier going to a casino, right? A great way to be able to take something that my dad always taught me when I was 21 years old. He's like, you know what, Sean, we'll go to the casino. He's not even a big gambler, but he was like, hey, you know what? Let's go to the casino. I know you want to go. I took out $200. Took out $200 and I got lucky. I was able to win $200 right away. Boom, $200. Now what my dad said is, Sean, take that $200, put it in your back pocket. So now again, all I'm doing is gambling for basically entertainment and free money. I won $200. I took my original $200, put it in my back pocket. If I win more money, it's all profit. If I lose anything whatsoever, guess what? I still have the $200 I started with. I can go home and say I wasn't a loser at the casino. The thing is, in stock trading, a lot of people kind of have this mindset that are successful where they say to themselves, hey, you know what? Maybe right now I'm in on my trade, I'm up $500 in profit. Let me lock in $250. Then I'll add a stop loss at my entry. So the worst case scenario, worst case is I end up making green. Guys, how great would it be that your worst case scenario is that you end up making profit? Your worst case scenario is you end on up in the green. You end on up making money, but it's maybe just not as much money as you wanted. Now, there's going to be those trades as well that you were up $500 and you say, you know what, let me be smart right here. I'm going to lock in $300. And you know what? The stock keeps going up higher and higher and higher. And you know what? That $200 investment that you still had left, guess what? It turns into $600. And now you might say to yourself, you know what? Let me be a smart trader. Let me lock in another $300. So now we have a total of $600 in our back pocket already. And now we're saying to ourselves, you know what? Let's again just hold this last little bit. And maybe that last little bit turns and falls and then we break even. And guess what? We have $600 in our back pocket of profit, right? We have to be able to take profits as we go, and then we're all set, ready to go. Okay? Now, what's another big issue that maybe traders face? And team, this is a fun one. This is one that you will experience at some point in your life, and it's going to be coming at you at your highest moment. And that is when you start feeling invincible because your confidence starts turning into cockiness, right? Has anyone ever done this before? Have you guys ever put yourself into a position where you say to yourself, oh man, I just can't lose. I won on Monday. I won on Tuesday. I won on Wednesday. I won on Thursday. I won on Friday. And now it's the new Monday and you're saying, I just made the most money I've ever made in my life. I can't lose. I can close my eyes and I can click buy and I end up winning. And then next thing you know, guess what happens? Boom, the red day happens. Boom, you end up losing 75% of everything that you won last week. You start saying to yourself, what the heck just happened? I was winning nonstop. Traders, you need to be able to have that confidence to be able to trade. But at the same time, we need to be able to still be disciplined. Let me draw this on out for you guys. I think that this is so important to understand the structure on how there are two different types of traders in the market. Okay, so we are going to have two different types of traders that people start off with and as beginners. What we are going to have is we are going to have the spectrum right here. And the spectrum is going to be on this side. We are going to have the fearful trader. Okay, the fearful trader is going to be the trader who is scared to pull the trigger at all. They are the person that says, Deck, I am so nervous. Deck, I am so scared to pull the trigger. I just don't want to lose any money. Right? There is that person. And you might be that person. Is there anyone here that says, yeah, every time I see an opportunity, I know I should pull the trigger, but it just passes me by? Every single time I'm about to jump in on a play, it just passes me by and I say, man, what the heck? I just never again pull the trigger on these stocks. And then there's going to be the other trader right here who is the over trader, who pulls the trigger on everything. The person that says, are you buying? I'm buying. Hold on a second. I want to buy some shares over there. Did you get some of those? Oh yeah, I got 32 trades underneath my belt today. I want that one as well. Oh, that one I heard again might be a big trade. I want to get involved in that. So that's what I want to make sure you guys understand. You don't want to be the fearful trader, and you don't want to be the overconfident trader or the person who over trades. We need to change this right here, okay? So we need to change this right here and right now. We need to instead be the person that's not fearful, but the person that is disciplined. If we are disciplined, that is when we can say we're not fearful, but we know when to attack. We know that an opportunity may pass us by if it's too risky. We may know, hey, you know what? I'm a little bit late on that play. Sure, there might be a play that gets past us every now and then, but it's because we don't feel confident because we're not scared, but we are aware. That's what we want to become, the disciplined trader. Now, what else do we want to do? We don't want to be the person that is cocky over here, over trading, cocky, buying this, buying that, buying that. We want to be the person that is confident. So, if we could be not fearful, but disciplined, and we could be not cocky, not over trading, but confident, and find somewhere right in the middle, this is the perfect trader. The perfect trader right here is the guy who is willing to sit out on a play when it's not worth it, but is also the guy or the girl who is willing to jump in on a play when it's there and the opportunity presents itself. Remember, you will never make money if you are never willing to jump in. But you will also blow up your account if you jump in too often and you are just gambling your money away. So you must be this type of person that is willing to jump in with confidence, be willing to jump in and pull the trigger when it's there, but at the same time, be able to say to yourself, hey, you know what? It's time for me to move on. It's time for me to be able to get out of this play. Now, let's again move on here. What's another reason why some people end up losing right away? Well, again, another reason that you guys need to be able to avoid is that starts too small. And what I mean by starts too small is, as we talked about earlier, this is a game of money. It's the stock market. The people that are the small fish usually end up getting eaten on up. So when I first started stock trading, I didn't have any money whatsoever. I didn't. I was a college kid. I would work in the summer, work in the winters, and those funds would hold me on over throughout the fall and throughout the springtime when I was at school. Right? Just like a lot of people do. I didn't have a job at college. I had a job during summer break and during Christmas break. Then I would work those hours and try to be able to have that money stay up for 3-4 months that I was over at school. Now, I can understand being able to get money and save up money is not easy in today's world. But the people that are starting with $500, it's almost a death wish of saying, okay, boom, your $500 is going to disappear. Even if you start with just $1,000, it's almost a death wish on saying, boom, this money is going to disappear. And the reason why it is almost that, boom, this money is going to disappear is because we need to think about this. If we are doing a $1,000 trade, what's a 10% return? We are going for a $100 gain, which isn't bad, and we could definitely get that. And our loss is going to be $50. But at the same time, guys, we're not going to be able to afford many shares. So we can't, it's going to be the lack of shares that we're going to be able to trade. And on top of that, it's going to be the lack of possibilities, because we're only going to be able to trade stocks that are going to be able to have very small share prices, such as $1 or below. Then on top of that, we have to worry about trading fees. Then on top of that, as a new trader with someone with a small account, we're most likely going to have to go through different losses, right? We're going to have more losses than wins if we didn't paper trade first and go through everything that we needed to. So the best amount of money to start off with is a money that you're confident and comfortable with. But the more money you have, the easier it is to grow. Traders, if someone out there was able to say, hey, Deck, I can start with $100,000. I paper traded for the last, 6, 7, 8 months. I've been slowly building up my tolerance, and now I'm going to go to real money, $100,000. Guess what? A 10% return for this individual is going to be $10,000 of profit, right? A 5% loss is going to be, as you guys know, a $5,000 loss. So the thing is, it's the same exact thing. If you only have a $500 account, it's going to be so much tougher to grow. I'm only going to be able to make $50 when I win and $25 when I lose. So, and on top of that, you have to add those fees and any losses you may take, and then you have the PDT rule, and then you're gonna have things it's just going to be much more difficult. So the more money you have, the easier it is to be successful in the stock market. I know that sounds like kind of like a rich, thing to say, but it is true. you are going to be able to make more money in a quicker amount of time with the more money that you have to be able to start. So how much did I start with? I started with $2,300. $2,300, was able to save that on up. Then my friend also gave me some money and I was able to be able to have a $2,300 account. Remember, that was a year after paper trading, then building up my tolerance, and all it comes on down to is one trade. One trade. So what was the one trade that, helped me? I was able to make a $9,000 profit on a trade. That's what, basically kickstarted my trading career. Was when I first started, $2,300. I'm happy when I make a $200 profit. I'm happy when I keep my losses to $100. I'm happy. My big days were $500. And you know what? I nailed one big breakout. One big breakout turned again my $2,000 profit, or my $2,000 account, into a $9,000 account. So I guess the total profit was right around like $7,000. Now, it was insane. It was awesome. But now just think about that leverage I have now. Think about, okay, how things changed. I was going after $200 days. Now I'm going after $900 days, right? Then think about the success it is to be able to grow. Think about how those gains are going to compound much more quickly. Think about how I'm going to be able to keep making this money in a quicker fashion, be able to keep going and going and going, right? So that is what is so awesome when you do have that right momentum, all right? Let's think about another issue that a lot of traders start, getting themselves involved with. They do not trade at the right times. Traders, for anyone who is on top of this, right? You must understand that you must be trading at the correct times. Pre-market is from 4 a.m. to 9:30 a.m. Eastern time. This is when you are going to have the hottest news and some of the biggest spikes. So, if you guys are on the California time, the West Coast, pre-market is going to be from 1 a.m. to 6:30 a.m. Now, the good news is the majority of the press releases are going to be from 7 a.m. Eastern time to 9:30 a.m. Eastern time, which means if you guys are on the West Coast, it's going to be from 4 a.m. to the time of 6:30 a.m. Eastern time. This is when some of the biggest, best, and hottest press releases come on out, and this is when you can make some of the most money. So, for instance, we could take a look today over on what was the best press release. The best press release today was GNLN, which is currently up 236% at this time. The press release came out at 8:30 in the morning. Now, if I know that we are going to have hot press releases at 8:30 in the morning, and I say to myself, all right, I want to be awake during that time, could I have caught GNLN, the stock that has gone from 240 and has spiked all the way on up to the price of 1080? Guys, yes, you could have jumped in at 8:30, 8:35, 8:36, 8:39, 8:40, 8:43, 8:47, 8:50, 8:56, all the way on up. You have 30 minutes to be able to make profit. As long as you're awake, as long as you're aware, as long as you're using the right equipment, as long as you guys can literally see the answer right here. GNLN over on Foxrunner right here, right? You can even go to the news alerts tab. GNLN just spiked again 300%, tells you exactly why it's spiking. So the thing is, traders, if you have the right equipment, if you know exactly what to be looking at the right time, you're going to be able to make a lot of money and you're going to be able to make a lot of cash. So that is what is so great. So the hot time is going to be 7 a.m. to 9:30. This is when we are going to have the hottest news and the biggest spikes. Now, let's think about this, traders. Why? Well, this is all a part of psychology. It's all part of the psychological game of stock trading. It comes down to first come, first serve. If I see that a hot press release comes on out, guess what? If I'm looking around and it hasn't moved yet, I'm going to jump in on that. I want to jump in on the hottest and best press releases, because when I jump into a hot and best press release, if I'm in first, guess what? I know there's other people sleeping, and I know there's going to be more people coming in as they wake up and as they realize that this stock has a hot press release. So if I see that GNLN comes out with this press release at 8:30 and I jump in, more people jump in, more people jump in. Now it's spiking, more people jump in. And now you are at the bottom, now just having that price target keep going higher and higher and higher, and you're making all profits. If you are awake at the right time and you see hot press releases at the right time, which I'm going to teach you, you can see number 11 right here, how to find hot press releases, that's when we are going to have some of the best success and some of the best gains. Now we got to think about this. At 9:30 in the morning, all of a sudden the stock market's now open. The stock market's now open. At the start of the day, guess what happens? People are buying. People are selling. People are getting involved in the hottest press releases. People are getting involved in all the best plays. We are seeing stocks spike up and down, drop huge. We are seeing momentum. And what did we talk about before? We talked about volume equals activity, activity equals profit. As long as stocks are moving, we can be able to make money. So at the start of the day, everyone's trying to get that fix. Everyone's trying to get that money. Everyone's trying to get that profit. Everyone is excited. It's a brand new day. It's a brand new start. It's a brand new week. We have that enthusiasm at a high, and that is when we could start making the most amount of cash. But as things start dying on off, right around 11 a.m., people start saying to themselves, oh, I made my money today. Oh, I didn't make my money today. Oh, I made my money today. I'm going to go wrap it on up, go get some lunch, hang out with the wife and kids this afternoon. Some people may say, you know what, I lost today. I'm going to walk away. Going to go get some fresh air, go ride the bike for a little bit. Usually after the first 2 hours, things start slowing on down. Then usually from around 11 o'clock to 1 p.m. Eastern time, we call this lunch hours, where things are a little bit slower. Things aren't really getting too much hotter. Things are, again, starting to fade on down here a little bit. And then usually things pick on up the last hour of the day. Now, why do things pick on up the last hour of the day? Well, hey, it's the last hour. I'm going to try to get my final trade in. I'm going to get in on this play. I'm going to get out of this play. I'm going to hold this for swing trading. Oh, it has earnings tonight. I'm going to get in. I'm going to get out. They just came out with a new catalyst, whatever it may be. And then at 4 p.m. Eastern time, when the stock market closed, we are back in after hours, which means, again, more news. Now, I will say the hottest news is usually in pre-market, but there will be more news in after hours where every now and then you might see something just absolutely take on off. So the hottest time to trade every single day is going to be the morning time in pre-market before the stock market even opens. I'll teach you guys how to buy in and out in pre-market coming on up. And at the same time, at the start of the day. The start of the day is from 9:30 all the way till about 11 o'clock. That first hour, that's when we have some of the most momentum. So we could see if we want to take a look over on the S&P 500 right here. The S&P 500 traders, there seems like there's a lot of momentum over here, doesn't it? You guys can see how the S&P 500 can crashing all the way on down and then boom, bouncing all the way back on up. Hey, if you guys are on put contracts, you guys are making a lot of money. If you guys are on buy calls right here, you guys are making a lot of money. But it's within that first hour. It's in that first hour here, team, where we have so much of this activity. We have so much of this volume. GNLN hasn't really done too much today. GNLN had all its movement over in pre-market. TRNR started fading on off at the start right here. It had all of its movement in pre-market starting right around 7 o'clock. So you could see where a lot of this hype happens. Sometimes at the start of the day, these penny stocks just die on off. So we have to be trading in the right times for us to actually even have a chance to be successful. If we're not, again, trading in the right times, then guess what, team? That is where we put ourselves in very bad place here. As we already talked about, the other two last things I want you guys to be aware of is not trading with confidence and also, again, over trading. So if we are not confident in ourselves, we're never going to be successful. If we're not confident in ourselves, we're never going to be successful in anything we do. If that's stock trading, if that is ping pong, if that's golf, if that's shooting a foul shot to win the game. Imagine, again, shooting a foul shot and saying to yourself, I am going to miss this play. You're looking around, the whole school's looking at you. There's, again, 1 second left on the clock. The game is tied. I have to make one of these two foul shots, and I will be the hero. But, oh, man, I'm not this guy. I'm not this guy. You look over, the girl or guy that you have a crush on is staring at you, saying you can do it, and all of a sudden you just airball 2 in a row. Oh, man, the school hates you. Everyone doesn't want to talk to you. It's brutal. I'm speaking from past experience. Okay, so what we have at this time, when we think about this, we gotta be confident. We have to be able to say to ourselves, all right, if I'm going to shoot this foul shot, I put in the work. I deserve to make these. This is the moment that I've been waiting for, that why I stayed late, why I did this, why I made those sacrifices and other things so I can make this foul shot. Same exact thing when it comes to stock trading. The thing is right now, you guys are taking this hour, 2 hour, 3 hours, the next 30 days to be able to say to yourself, I'm taking sacrifices out of my life so that I can be able to learn how to be able to trade stocks and have a better education in trading stocks. These are the type of things that you must say to yourself when you're trading stocks to have that confidence. Hey, you know what to do. You know how to do this. You're, again, building on up. It does come down to that mindset right there. So absolutely beautiful. Ladies and gentlemen, that's going to, again, wrap us up to our, again, point 2 right here, where it's going to be the do's and don'ts of stock trading. So we're going to, again, throw this on out here, guys, and we are done with point 2.